What's going on, everybody? It's your boy C-Zar, and we are talking about Bitcoin today. Hit that like button and subscribe if you haven't already. We're going to get into this real quick. Yeah, man, just want to go over some general thoughts and then do the day-to-day analysis. General thoughts, again, to keep the mind clear. We are at the point in the bull cycle where we will likely be boring. Likely, like with a very high degree of certainty, likely the price action of not just Bitcoin, but for the majority of cryptos, will be boring for the next, month to 3 months. Potentially longer than that even. And I know that sounds crazy because this is crypto. Crypto only goes up or it only goes down. No, it moves sideways. There's solid portions where it does move sideways, and after the Bitcoin halving specifically is a key point in each Bitcoin cycle that we've seen these kind of sideways movements taking place, where things are just boring for a little while before we see the most exciting part of the bull market, which is the second phase. So we're not in that yet. And everybody, as far as the words that I just used, I said second phase. I know there's people that say this is phase 1 of the bull market. You bottom out. Phase 2 is pumping up. Phase 3 is accumulating. Phase 4 is pumping up again, and then phase 5 is the final rally. There's people that define all these phases, and to me, it's easier to just say we've got the bull market, we've got pre-halving bull market, and then we've got post-halving bull market, right? And the pre-halving bull market is a lot less bullish than the post-halving bull market is, but most of the money that you make in a crypto bull cycle will be done through the things that you set yourself up for pre-halving. Now, being that we are post-halving now, we do have the post-halving kind of lull that is generally to be expected, something that's, again, very normal. So we do have kind of a last call, if you would. If we're at the train station, you hear the conductor saying, "All aboard, last call, all aboard, get your tickets," whatever. That's what's going on right now. This is kind of a last call before we really see the exciting part of the bull market. And I just want to go real quick before we get into the day-to-day, guys, before I turn off the music and then we can focus a little bit more. I want to take this second part of the bull market last cycle, okay? Second part right there. And I want to just very, very key kind of thing from the last two bear markets, from maybe let's just say where the halving was on that closing month, the closing low of the month. Sure, we'll do that. Maybe not the closing low, but where the low is. Man, what was I? That's not what I was going to do. What was I going to do? Maybe I'll just do. I was trying to do it from this one. Okay, that's what it was. I'm sorry. No. I'm all over the place. Okay. We're going to take this line right here, man. We're going to take this line right here that I just drew. I don't know what I was just thinking about doing there, but just forget about that. Act like the last 10 seconds didn't exist. This is the second part of the Bitcoin halving, or of the Bitcoin bull cycle after the halving, right? The halving was in May, would have been this month back here, right? And then 1, 2, 3, 4, 5 months later, even though, yes, we had moved up going into this month here, we had moved up already. It was 5 months later that we can see this clear trajectory upwards. The main kind of strength of the last cycle, right, happened after the halving. Same thing in this cycle. Here was our halving here. I don't know what I was measuring the percentages for, but you can see that the second part after the halving, this is our strongest part. I'm not going to measure that. I'm just going to go off of the last cycle. If we were to see that, and let's say we were to see a low that took us as low as 44K, okay? I doubt we're even going below 50K, but 44K, right? That would put us at a high, even to just see the same trajectory we saw last cycle, that would put us at a high above 267,000. You guys, I see all these people making videos on YouTube, right? Like me, myself. There's all these people making videos talking about how people like me, maybe people like you, people like anybody who's in the camp of seeing Bitcoin go to a multi-$100,000 price this cycle, that we're smoking drugs, or that we're just crazy, or that this is our first cycle. And for most people, it probably is your first cycle. But I want to say, maybe you're crazy if you're just blindly taking that into faith without doing any research in it on your own. But to me, you guys, this cycle, it's beyond obvious to me that we will not just break 100K. but we are going to demolish 100K. We're going to go up to 400K, 500K by the end of the cycle. I know it sounds crazy, but enough about that. Enough about all the long-term stuff. I'm rambling here. I'm going off on all kinds of tangents. I want to get focused and talk about the day-to-day stuff. I just want to put it into perspective, right? This was a very weak cycle. Everybody, it doesn't matter what camp you're in, everybody agrees that the last cycle for crypto was lackluster. And everybody this cycle is saying that they're expecting a stronger cycle, right? Or that it's one of two things. It's either that it's going to be a stronger cycle or that it's going to be a faster cycle. It might be stronger, but it'll end shorter, whatever. So if we are as strong as not even like the last bit of the bull cycle, but like the major kind of key move here that took place, it took 1, 2, 3, 4, 5, 6 months, 7 months to get to the high. Right, seven months total to get to the high. If we're as strong as that 7-month key point here, even from a low of 44K, like right in the middle of this accumulation range, let's drop it even lower. Let's go all the way down. If we were to have a trend line right here, like this, right? If we were to have some kind of trend line like that, and hit it this month, so it's because we can't go back in time, right? I'm not going to draw it to here because this month already closed. Let's say it hits this month. We'll put it right there. Even if that happened, we get that same kind of maneuver. We're up above 267K by December of this year, at that same kind of rate of growth, which I don't think is going to happen. I definitely don't think that's going to happen. I do think that we're going to be above that number, but not this year. I could see Bitcoin breaking 100K this year, but man, I'm going off on all kinds of tangents. I really could see Bitcoin breaking 100K this year. I was kind of anticipating that it would reach for 100K or at least 90K by the halving, but that got tarnished, and I withdrew that call a couple weeks before the halving actually happened. But that's neither here nor that is there. That's not here. That's we're at a different phase now. What I'm trying to say, guys, is let's get into the weekly stuff. Let's get into the daily stuff. I don't understand how people can be. It feels bearish to me. Even though they're calling for higher prices, they're calling for Bitcoin to go to 90K or 170K. Like that, those are bullish targets, right? For calling for it to go up. But to me, it's just so bearish. I can't wrap my head around a sub 260K Bitcoin by the end of the cycle. And really, I think we're going to see a 400K Bitcoin by the end of the cycle. But enough of that. I keep saying that, but for real, enough of that. We take our relative low here, right? We're on the weekly time frame. That's what that is there. We take our most relative low that we had back in this consolidation phase from December of 2023 until we broke out in February of this year. We're going to take our low from that point and go up to our high from this relative phase of consolidation here. We have bounced off our 382, which is a very common kind of area to find support off of. Yes, I'm aware it went just below it, but that's actually more common, is to go a little bit below your 382, just like this. Very iconic. And you did close all the way above your 236. That in itself is a pretty damn bullish bounce. But if we look at it for what it's worth on the daily, it kind of, what it really looks like to me is that you rejected the 236. Yes, you closed above it a little bit, but just couldn't stay above it, and really you've been rejecting it here, and a rejection off of the 50 level here, maintaining a lower high on your RSI. It's in a pretty bearish trend, a systematically more bearish trend as it goes down. My theory is, you guys, whenever you see stuff like this, right, so we bounced off the oversold zone already. We dipped into it a little bit, but my theory is with stuff like this, whenever you're in a solidified downtrend in the RSI, which I think there's no disagreeing that we are, lower lows, lower highs, that's what a downtrend is, and this has that exact thing. So when we get to the end of this, when we do get to the point where we're either in the oversold zone again or lower, I would expect that we see the strongest part of this move down, and I think that's exactly what this whole bit is just one solid move down. And that's not the best drawn lines, but it's some kind of just downtrend, a little consolidation phase, whatever. And generally speaking, these things do end kind of with a bang, right? Like our last one over here, right? We ended with a bang. We didn't start moving up after this boring phase. No, we started moving up after we dropped a consistent bit over the weeks, over the days. So that's kind of what I'm anticipating now. Any of these drops that we've seen, I'm expecting we see a bigger one. Perhaps we don't see a bigger drop than this day, But altogether, for this last segment, maybe we get 2 days that are 5% each or something like that. Maybe we do get a day that's bigger than 8%. Either way, I would expect that we do go below that 382 again, and the next likely target would be the 0.5 area, which is all the way down at 53K, 53.3K. Now, we could drop down to the 618, which is all the way down at about 49.5K, 49.2K, somewhere in that area. That is possible. It absolutely is. I just personally, I don't think that we're going to do that. The main reason that I don't think we're going to do that is because if that is the target, if that 618 is the target, which it could be, from high to low, that gives Bitcoin a 33% drop. And that's within the realm of normality for Bitcoin throughout its history. That's a familiar drop. That's literally a bull market norm in the course of history for Bitcoin. However, I have this theory, me and a friend of mine who's also in crypto, whose opinion I respect very much. We're kind of in the same camp, and there's other YouTubers too who I don't personally know, but I've heard them say this same stuff, that we just don't think that 30% or more drops are in the tank for Bitcoin anymore during a bull market. Inevitably, yes, we will drop more than 30% in the bear cycle, but because there's institutional players here, because of all the attention that's going on right now, because of the lack of supply and the increased surplus of demand that presents itself, and we've just gone through the halving, that demand's only more through the roof now. I don't see us getting to 33%, man, of a total decline. I even think the green line here at 27% is a bit extreme. A 23% drop, which is what we have right now, I think does suffice. However, just based off of the charts, based off what I'm seeing in the weekly RSI and the daily RSI, even on the 4-hour and just the lower time frames, it makes sense to me that we're going lower. It really does. And you don't even need indicators to tell you that, right? Like this just looks pretty sad. Look at where the volume is coming in, right? Like here we are at the top. A lot of volume came here on this move down, right? No volume again, nothing's above average. You get a little poke above right there, but then you get more volume right here. I know it's covered by the pluses and negatives on this move down. You get more volume coming in, increasing a little bit on the move down. We get even more volume increasing just a little bit, or actually it's might even be a little bit less, but still the most volume we've seen, relatively speaking. It all comes on these down moves. We've got low volume now. We're waiting for the next bit of volume to come in to promote our next leg, whether it's up or down. Unlike a lot of people in the space right now, and I think that what I'm about to say is it's becoming more obvious. Where back here it was less obvious, and back here it was less obvious. But I've been saying this at least since like the end of April. I've been saying this exact thing, which is that a lot of people are expecting that we are going to find our low soon, and then it's off to new all-time highs. And I think half of that's true. The part where we are going to find our low soon. If not today, like what? It's already the end of the week, right? Yeah, we got a whole new week. If not, I mean, within this week, I would expect that we find our low within this week. I really would. But just because we find our low doesn't mean we're moving up like that. We will likely meander just as we have coming down, we will do going up. We will just kind of be boring, right? And even at that rate, that would put us to like the middle of June, if not potentially likely sometime in July. Who knows, or August. I'm thinking August is when we're going to break out, but it's going to be months. We might move up initially, obviously, after our low. We'll have a nice bounce as we commonly do, but prices are going to be boring. You guys, this is that boring phase of the cycle where every pump just promotes a dump. Every dump just promotes a pump. It's not going to be beneficial necessarily to just be a bear or be a bull. If you're a bull, if you're a full go bull, and you're just holding on for the end of the cycle, you're not doing leverage trading, you're not keeping vulnerabilities around yourself. You just have a solid game plan. You're managing your risk well, and you are playing for the long run. You're going to be fine, right? Any bearishness that comes your way. If you're a bear, all these little drops are going to get you excited, and if you're bearish to like this point down here, or maybe even a little bit lower down here, okay, cool. But if you're a bear down to 30K, 40K, lower lows than that, you're going to be waiting for a long time. You might not ever get those prices again. So again, just back to the point that I don't think that this phase is going to help the bulls or the bears. It might help anybody who's DCAing. It might help day traders or range traders, stuff like that. But for most of us, it's going to be a fairly boring time. I don't know if you're a trader or if you're practicing trading, man. This would probably be the best, one of the best times to do it because it is going to be so boring. I mean, let's just see here real quick. Low to high, 18%. This low to high here, 13%-ish. Low to high here, 13% again. Low to high, nope, come on. Low to high here, 16%. So really you could develop a safe, more or less, I say safe. None of this is financial advice. I'm not a financial advisor. Let's do the lows too. You could develop a strategy though where if you feel like you did buy around the low, let's just real quick. If I was range trading, this is kind of how I would look at it. Let's say the goal was to buy somewhere in this range, somewhere at these lows. Okay, you're obviously not going to buy the absolute low, and you're probably not going to sell the absolute top, right? So that means 18% is the range you have, but you're not looking to get 18% gains. If you're doing leverage trading, okay, you can get more than that, obviously. But let's just assume you're doing a quick little trade, whether it's at a flat rate, spot prices, or if you're doing a low leverage trade, whatever. You're looking to buy down here, but let's say you don't. Let's say you mess it up, and as soon as you break this line right here, that's when you're like, okay, I'll go long. I went long right here. Okay, cool. Which means that potentially, let's just do it right there. Potentially, you have a total of, what would that number be? That would be, at the most, if you were to sell the top, a 5.75% gain, or like let's call it a 5.5% gain. So being the smart, sophisticated trader you are, hopefully, you're going to understand, okay, I'm probably not going to catch the top. That's the top of the range. Even if I catch a little bit, there's no guarantee that my whole order will get filled. So let's bring it down a little bit. Let's bring it down to maybe a 4% trade, a 4% gain, and you can see all the tops here getting skimmed. This is hindsight, so it's easier to say, but you accept that you've missed the opportunity to buy at a good place, but you base it off of the averages that you have on all these moves up, that there's still a little bit of room to go. You could put on like a 5x leverage, that 4% gain turns into 20%, 3x leverage turns into 12%, whatever. I'm just saying, just because you don't catch the move perfectly doesn't mean you still can't make heads or tails out of the direction of the trade. And I'm going on a lot of, I don't know, hypotheticals there, I suppose. But what I'm trying to get to is essentially from any low to a high point, anytime that there's a discernible low that's been picked out, which it might not be obvious at the moment, but as time goes on, it is obvious. If you want to know when it's a good time to get out of a trade, just wait for it to pump about 13%. Really, I'd say 10% or more, and then just don't be in a trade at that point, right? Even if it goes all the way up to 18%, don't be in a trade or short it, But I wouldn't short, man. I'm not a shorter in a bull market. That's not my style. I've given up on shorting in bull markets, you guys. Don't short in a bull market. Don't long in a bear market, unless it's like spot longing, in which case that's okay. Spot trading is more encouraged than leverage trading, but really the most encourageable thing would just be hold. Just hold. But let's just see here real quick on the downtrends too. I hope that wasn't too crazy. I'm like spitballing ideas, right? Like I'm not like putting a whole lot of thought into this. 17.5%, 18% drop there, 16% drop there, 10% drop there. So yeah, kind of the same thing to the downside. Like anytime that you're past 10%, maybe that's the time you should look to get out of your short positions, look to add on. Again, even if you get in at a terrible point, understand that there's still like a cause of averages to hit here, with this kind of idea in mind. And this is not, I want to be clear too, for anybody that left, I'm sorry, you're missing out on probably a key point. I hope none of what I just said stuck with you. But if you're still here, this part I do want to stick with you. This is not permanent. This is a phase. Just like a teenager growing up and they're in their heavy metal phase, or they're in their punk rock phase, or they're in their whatever Hello Kitty phase, whatever, just like an animal, a human, a whatever, a living being going through phases of their life. This is a phase of Bitcoin's life during the bull cycle, of which it's boring. All the theory to how I would trade if I was shorting or longing, which I'm not, by the way. I'm just setting this up for anybody who might be thinking about it, just to show you kind of how easy quote unquote it might be to trade this range. it's not going to be like this forever. We're only going to be abiding by these rules more or less for the next month to 3 months, probably. That's my assumption. So, but getting back onto these lows here, if we're at this relative high, and we were to assume 17 and a half, 18, 16, 10, let's go, I'd say at least like 16%. Our next low could come in at about 54.8K, and that actually is an area that I'm looking for specifically. That actually is the area that I'm looking for Bitcoin to go down to. A little bit lower. 17.1% though, I don't think that that's too much to ask, especially going back to the idea that we are probably going to see the strongest part of this whole down move take place. So even a little bit lower than that, like genuinely 17.5, 17.9, we could see something bigger than that from this relative high. That absolutely could stand. What I don't expect to see is anything that's like 30% or greater overall, personally. Just because I think a lot of people, I mean, maybe we see 30% exactly, and that's it. But 32%, 36%, I accept them as possibilities. They absolutely have even a decent chance of happening. I'd give them like a 20% chance of happening personally, but maybe they deserve a greater likelihood than that. I don't know, but my main kind of theory for that, again, is just going back to the idea that we've got institutional players heavily involved now. There are on-ramps to Bitcoin that provide availability to access that we've never seen before. I think the demand is at the point where we're not going to get those drops anymore. People might be waiting for them, and then they're just going to keep waiting for them. But do accept it as a possibility, because we have seen this throughout Bitcoin's history where a 30 to a 40% correction happens. But time will tell. I don't know. The main essence of all this, before I got lost in the tangent of talking about trading, which I rarely do, because I trade myself, you guys, and I don't really like advertise that too much, because whenever I first got into crypto is when I traded the most, and that's when I got wrecked the most. And I know a lot of people who are watching this video, you guys have been in this for multiple cycles. You've been in this this is your first cycle, whatever it might be. I don't know what your experience level is with trading. And for anybody who's new, it seems like this like shiny new toy, and it seems I don't know. You have people like me, or you have other YouTubers talking, you feel like you've got a sure bet, or like a sure way to predict the future, and that's not at all how any of this is. And it can wreck you, man. It can really wreck you. Whenever you're new, you need to accept that you're new, or even if this is your second cycle or third cycle, sometimes you just need to accept that you can't be right all the time, as I have, right? And sometimes the best way, and actually genuinely speaking, at every point in time, the easiest way to invest, to trade, whatever, is to just buy and hold. Buy and hold for the cycle. You don't even have to guess. Is it going up? Is it going down? Who cares? Let me go to bed. I'm going to wake up in about a year, and things are going to be way more bullish than they are now. So that's the easiest. Instead of playing this hour by hour, day by day, waking you up in the middle of the night just to see what the prices are kind of game. We've all been there. If that's you right now, hit that like button. Shout out to the degens out there. But again, if you are going to trade this, try to be very strict with yourself. I do think that we are in a tradable range. I think we will continue to be in this tradable range until at least July, if not August or September. I believe this next bit that we're going down will be the point that we find our low. If it's not like this, then maybe we go up and then maybe it's like a quick little rip and then dip. At any rate, though, I do expect this next drop to be our low point, but that doesn't mean we're just going straight up. There will be points where we pump 17%, and then we pull back, and then we pump 17%, and then we pull back, and this time we have a lower high, and then we form a higher low, and people are like, oh, are we gonna break this structure? And then no, we don't. We go up here, and then we pull back. It's not going to be a straight shot up, no matter how you cut it. So long drawn out video just to say that. I hope you guys liked it. If you did, hit that like button. Subscribe if you want to see more. I don't really know if I have anything else I want to say. I feel like I went off the rails a little bit there, but hopefully it all makes sense. And sometimes, man, I feel like I go off the rails, and I'll watch my video back, and I'm like, okay, that wasn't bad at all, actually. So I give myself a harder time. That's probably true for any of us, right? We give ourselves a harder time than people actually do. you're your own biggest critic. If you're doing it right, you should be your own biggest critic. And I don't mean that in a bad way. I mean that in a good way, right? But I don't know, man. To me, it just looks like the bears are in control. It really, really does. 4 hour looks dominant to the downside. Looks like we're about to start moving down today. And the daily is just even more dominant to the downside. We've got one more drive in us. I do believe it's going to take us below this low, and I do believe we'll get below the green line. I think 54.3K at a minimum, maybe 51, 52K at the most. And yes, it is possible to go lower. When I say minimum and maximum, this is just my personal expectation. Can things fall short of my expectations? Sure. Can they exceed my expectations? Sure. What does the price care what I have to say? I'm just saying this is my personal zone. And really, I'm thinking this area specifically, 54.3K to 53K, somewhere in that zone. So I hope you guys liked the video. If you did, hit that like button. I'll see you on the next one. Take care. Bitcoin to 400K, 500K by the end of this cycle. Let's go. Bye-bye.